The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Happy Dow 20,000 for those of you who have been long. Those of us who have been short, I'm just kidding. Actually, I'm happy for most investors out there. This is, a lot of people have, the portfolios are pretty much generally long only, so I'm really happy for the Americans out there and the rest of the world who's made a couple of bucks off this move up. We've talked about some trading opportunities around, the S&Ps and the Dow kind of spinning around near the highs here. One of them yesterday was this gold trade. We talked about trying to put stops above 12.11, letting this thing kind of trail down relative to where the dollar was, and with the S&Ps kind of on the launching pad, and that dismantling the concept of gold continuing to go up. We haven't reached our targets yet. This is the daily. So that weekly and daily DMZ up there, 1210, 1211, still hasn't reached the entire cycle of getting back down in the profile and reaching the 1177, 1176 area. So still looking for lower numbers there. Crude, talked about this being the decent long play right now, even though the dollar looks like it could bounce a little bit here. So we're going to hit that. Really quick, talk about this one. So the dollar's actually climbed quite a bit this morning from that 99.60 or 70 area that it started. There's the there's the back the truck up area that we talked about on the dollar, providing a trading bounce. There it is. Reached a low of, 99.76, 99.63 is the tin sound that you should have been hearing, and I actually think we can bounce a lot higher. I know the overhanging worry is, dismantling, free market type situations globally. I'm not opposed to a version of that. But I don't think you start meddling with that too much. I think that, it's always country first, of course. But, you can't start really changing gears too much and dismantling free trade agreements and things like that without really, a well thought out plan. Trump has historically, even with some of his businesses, kind of gone too far too fast. I just think these things need to be extremely well thought out before any type of changes are going to happen. And how is that going to affect U.S. companies in the market, share prices? How does that affect U.S. citizens? How does, making things here, the cost of that, and versus, I know you guys have already thought about all these things, making them overseas and taxing them heavily coming back in. All these things are market volatility indicators. So I think, we're in a pretty good spot here as far as looking at buying the VIX still. I think some bombshells are going to go off. You don't ever know when those are going to happen. I actually dismantled my long strangle yesterday. I started selling some of the calls and have kind of tried to trade that a little bit more directional now that the VIX is super low, leaving the puts on. So, we've broken out on the highs. The market has reached 20,000. We started coming off a tad this morning. But, if we close back in the box, especially this week, 22.24, 22.37, we could see those numbers. But again, I've got some kind of cheap lottery tickets on at this stage in case that does happen. Okay. Let's go back to the dollar for just a second. talking about some of the things that, Trump thinks that, our dollar's overvalued. I mean, and that goes in line, as you know, trying to manufacture goods in this country. Who knows where this is going to end up? All I'm saying right now, and I think Tom's pretty much been spot on with the dollar, and some lower numbers are probably going to be in order here. But you've got to look at a technical bounce situation as at least a short-term trading opportunity, and that's all we were saying here. 99.63, 99.70, that general area, catching a little bit of a move here, and we've actually popped almost 80 or 90 points off of that bottom. Where does this thing end up coming into some form of resistance? I think your first targets are going to be where we started breaking down the dailies before. Remember, we've been trailing up on the dollar, and this was just a pullback, some technical damage on the daily here, but this was just a pullback back into those weekly ripe areas. So the first targets are 178. I actually think we're going to probably traverse back into this profile on the daily, which actually has edged higher relative to all other profiles. So I feel pretty good about this. Getting back above 178 is going to be a big deal, but you got to be willing to take some off at 178, and then your next stop up, in my opinion, is going to be 101.87. And I knew I had the wrong glasses on. I knew something was going on. Here we go. Going back to the VIX for a second. A lot of people get on the bandwagon late, and it's, the guys I was listening to some guys on the TV yesterday talking about the VIX should be fairly priced now around 8 and some change, and I'm like, all right, that doesn't make sense. So, and I think that would be below, let's see. That would be some pretty serious lows on the VIX. But, in an environment like this, a lot of times, we talked about giving yourself some room, trading it out a little ways on the month, on the options on the VIX, that, volatility play. If it doesn't work, you can roll it into the next time frame also. I mean, this is ultimately going to happen. You just don't know when. So keep that in mind. I mean, Logan talked about a volatility play on the VIX, and didn't happen. It's going to happen. That's not debatable, actually. Especially with some of the things that are going on now. I mean, I think you just got more of a ripe situation than you've ever had. The Shanghai, talked about this one being, and you've got some ETFs, I think actually on TFNN. Some of those are on a commercial on TFNN. Let me see what they are. CHAD and CHAU, is that what it was? There's quite a few ETFs talking about the China A-share situation, but those were advertised on TFNN. We'll be right back and finish up with China.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We were talking about some ETFs, 2 times bullish China A shares, CHAU, and then the opposite, CHAD. Here's the CHAU, and I'd rather look at the CSI 300 to gauge when to start looking at some of these. These definitely give you some bang for your buck here. Let's look at CHAD. This will be the bear 1 times shares. Here's that. They're obviously going down if the Shanghai's going up. But let's go back to the CSI 300. So really was a super attractive situation. Let me make sure we got the weekly here. There we go. Why does that do that? I got a Kali signal about that. Save this page again. Here was the super attractive situation that we looked at, and that's why looking at this longer term situation on the Shanghai 300 or the CSI 300 is better technically to find the areas. You got a much better sample. Remember, we're trying to find a volume relative to price data sample set that's pretty good to try to use profiles. And when you're looking at some of those ETFs that are mapped towards some of these larger indices, you want to kind of throw out their technical situation relative to what we're looking at on the thing that drives those ETFs anyway. So here's the daily, and first targets we talked about 34.33 on the Shanghai, and then next up 35.21. So I think those 2 times bull CHAU, was it, might have some more oomph in them. Let's take a look at the 10-year. And we caught some pretty good shots this week. I mean, we were a little bit more biased towards the long side on the S&Ps. Talked about short and gold at around 12.11, giving yourself a little room, of course. Talked about trying to buy the dollar on that bounce area around 99.65 in that area. Let's take a look at the 10-year. This has been a no trade. I don't really think, shorting this right now is a great idea. I don't think going long it is a great idea. If you're going to have a little bit of a trade bounce, you've got something around 123.09. but that we've already bounced off that one time, and I don't think we're going to see a significant bounce off that area. We've talked about, crude. We've talked about, I'm sorry, I got the S&Ps over here. We've talked about the S&Ps, but I want to revisit this. Here's the 240s. This, yellow bar appearing means we're probably going to have a new profile lock in here on the short-term 240s. So that bust out on the daily and this, profile appearing below price action a couple of weeks ago, all bullish. It would be very depressing probably for a lot of people. We had this close above 20,000 yesterday. The S&Ps have broken out. If we get any type of reverse, especially back into closing below 2277 on the S&Ps, I would just consider that, oh my God, we bought the breakout, and there's going to be quite a few people trying to exit at the same time. But right now, you've got to wait and see. We could spin around up here above 2077 and just consolidate. You will have some new regulation of the trade up profiles appear on the 240 here, and then that'll actually provide you some form of sanity to trade this particular thing from the long side or the short side. And we'll know that in the scanner. Let's hit silver because we've kind of stayed away from silver. And gold was that more attractive situation to be able to play defense. Here's silver. Again, I think is something gold is going to have a little bit more downside to it. Silver, 1653 is going to be the targets on that for it to move a little bit lower. Let's take a look and see how the XLF did yesterday. Obviously, with rates rising and the market busting out, this thing's not going to complain about it. But the XLF didn't bust out, had a pretty good move up. It had already kind of made some pre-moves, factoring in all the extra money they're going to be able to rape people. Well, excuse me, all the extra money they're going to make from their customer base. Here we go. JP Morgan still that killer bounce off 82.73. I think we're probably going to see the highs again on this thing, at least retest them. Bank of America, these things are sitting on the highs again. Not the you got way better shorts out there. We looked at a couple of stocks that, somebody in the den saying rape is correct. There's not a lot of other ways to put it really, but I thought we might not want to use that term on the air. ENDP, this is one we've kind of been looking at from the short side. It's been shown on the scanner. Things when the lows go lower. It has just not a hope in the world, and I just wanted to point that out. Here's the weekly view on this, and this is, again, the scanner picks these things out. Sometimes they reverse, but when, we break below profiles and we retest that area that, was the bottom of a current profile, it provides trading opportunities. Stocks like that, they're not on sale. In a market like this, they're just, the market's clarifying what's a piece of crap and what's not really. So when we look at some of these, we looked at some of these at the close yesterday. We looked at a couple of stocks that were breaking down. Let's take a look at Pfizer, that have been not cooperating, especially with this. Any stocks that you can find that just are not going along with the market right now, breaking out above 20,000, especially ones that have generally a high beta, you can pretty much put on a pretty low risk trade on some of these going the other way, because if the market does pull back, it's already proven that it doesn't want to pop with the market making new highs and breaking out. And if the market does pull back, which we don't know if that's going to happen, a lot of these are already in the camp of nobody wants to own them right now. So, the scanner can pick some of those out. There's not many on the breakdown scene here, but you've got some in the strong downtrend scene, a total of 8. Walmart, amazingly, Not a good thing there. Hadn't looked at that in a while. There's ENDP, AES, Hess. Let's take a look at a couple of things that kind of lifted up into some resistance where you can hit it. Hormel Foods, we've been talking about this one for a while. It is at a really, really attractive area to short this, in my opinion, around 36.58. It's not the household name of day trading stocks for sure. But again, we're just trying to find technical setups that might be pretty attractive. Let's take a look at SWN. This was the darling of the oil world that we were looking at for a while. We'll be right back, and we're going to take a look at this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Kimco Realty, KIM. If you're looking for a stock that just doesn't seem to have any hope here, and it's just congregating or consolidating around weekly unfair lows, this is one where you might start hearing a whoosh sound, especially with the market kind of clarifying that this stock doesn't want to be bought right now. Keep your eye on that one. That's something. You got a decent little chance to play defense here on the short side if you're not wanting to chase stocks up right now. 25.21, a decent little situation that you might want to take a look at. Black & Decker, let's take a look at this one. So, yeah, this one, this one's something you might want. It's got better shorts out there. So Southwestern Energy, we're taking a look at that one. Let's just take a look at it on E-Signal. MCK, somebody was asking about that one. Obviously, we're just getting its head handed to it this morning. We're trading about 140, so about 11 points lower. Man, I wish that profile had been a little bit lower there. But it's really wild how this works out. And when a profile appears above price action, it's very bad. And when it appears below, it's very good. This is that daily. This is kind of like the S&Ps, that weekly. This is the weekly on MCK. But, what do you do with it now? And here's the daily on it. It's kind of a crapshoot. I mean, some people, I think you got better things to put mental capital towards than that right now. I have no idea where it's going to go. And there's nothing to really play defense with on that stock to try to figure out what's going to happen with it. Here's SWN. All right, so here's the weekly. Here's the weekly on the SWN. This was kind of a little darling for a while when oil was kind of making new lows and this thing was hanging in here. But this is why I think, being a, not a micro market timer, but being able to kind of technically look at things. Tom and I were talking, or Tom was pointing this out yesterday, and I agree with it fully. There's so much fundamental news you can get involved with, and there's just, from a timing standpoint, it is like virtually impossible to trade the markets, in my opinion, on fundamental news, especially when it comes to the stock world. Talk about fake news. But, technically speaking, the price of an instrument is what it is, and that's where buyers and sellers have agreed at this point in time, no matter what kind of information's out there. Unless it's insider trading, everybody has access to that information, and especially the guys on all these desks who are pushing the stock or trading the stock on an institutional level, whatever. The price of the stock is what it is. So technically, looking at things technically, in my opinion, Tom was kind of pointing this out yesterday, is a lot more riper situation as far as trying to make sense of the markets. And he kind of had stated yesterday he converted over to that kind of mindset a long time ago. And that's kind of the crux of the TFNN network, I think, a lot, is you get, that great technical outlook. And then you got some guys who are bringing some great fundamental news to the table, just to kind of give a worldly view on what's going on as far as the news goes around the stock, and that's great. I personally really don't pay too much attention to fundamental news at all. That's worked better for me. Here's SWN. So technically, when we started getting closes below these weekly profiles, I mean, you could look at this a lot of different ways, but this is kind of the stake in the ground. We're breaking down. It's okay to be short, not okay to be long from a long-term standpoint. And this kind of stake in the ground right here back in October, could have saved you some decent money here. When we have this new profile attempt to appear, then it might be okay to get back in the water. But, looking at this and driving back down into the balanced area, a lot of times these are kind of explored, just like that happened there. I don't know if you can see this, but, it's kind of a reason to look at this from like at least let's sit tight for a little while. Right now with SWN, the good news is, I think at this stage, if we can get a close back above 10, that's going to be some technical damage on the daily, and also kind of put you right back in the balanced area on the weekly, which is where you can kind of orient stops again. But right now, that hasn't happened. We're trading 977 this morning. So again, I think this is kind of a wait and see. You had another stake in the ground last week, getting below this bottom of the box here. You've had some trading opportunities within, but just to kind of look at that, if somebody just threw this at me right now, I would say I don't see any leverage with it. I think crude is technically looking relatively ripe. and I don't feel comfortable shorting it right now either. So. What did Apple do? Of course it went up. And some of those technical things that we just spoke of has kept me out of trouble on Apple. I haven't been excited about buying this stock. You guys watch this show, and now it's at 120. At least there hasn't been really a lot of reasons to get on the short bandwagon. Here's the weekly. We talked about getting the close back in below 114.82. That didn't happen. And right now, basically you just missed the move up, but it's okay not to be in every stock all the time. I just didn't see any big reasons to get long the stock. Okay, so here's Amazon. We've had tremendous moves lately. Top of the profile here, 847.21. You got to watch out for that, trying to short against it, because as these things kind of get near recent highs, a lot of times they blow through just to do it. Trading the reverse on that trade would be kind of cool, letting it do its thing, and then hopefully getting it closed back below 847 if you're going to look at Amazon from the short side. I still think Trump may come out and basically say that, okay, and this is completely possible. That's why you got to watch out for stocks like this right now, because he could come out and say, wow, the brick and mortar stores are getting crushed, and give a speech on that. Let's tax the online stores more, and then what does that do to Amazon's very thin margins as it is? Stock could come unglued. Johnson & Johnson had a really decent bounce yesterday, getting back. We talked about the targets being this 111.96. We kind of reversed and closed back above there. I actually think that might be relatively bullish for Johnson & Johnson to actually kind of bounce here now. We've had that short on from 117.23 down into 111 and some change, and that reverse yesterday was pretty cool. International paper. All right, I've been really, really bullish on this stock. If you've been watching this show, really love how it's acted. Strong stock in a strong market, and man, after the breakout, the market just carried this thing through. So we're going to talk about how do you trade this thing when we come back, folks. Bye. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. We were talking about international paper. Let me pull this back up. Weekly and daily just bust outs here. What do you do with it now? I mean, a stock that had broken out before Dow 20,000, and this is what happens, kind of proving that clarifying situation that we talked about on stocks that weren't cooperating. This was a stock that had kind of pre-cooperated. So what do you do with this now? There's no way to buy it up here at this stage. And I think, shorting this is completely for gamblers. We've all got a little of that in us, of course. Abbott Laboratories, where are we at this morning? 40.56. So trading back above here, I think this drug sector you just got to stay away from. So we're going to pass on that. Let's take a look at AT&T. Yeah, not a lot of edge there. These are stocks in the news. Let's take a look at Boeing. Yeah, who knows what was going to happen there? But what do you do with it now? Again, I don't think you short these stocks. FCX, Freeport. Let's see where we're at this morning. 1635. Yeah, this one might have done what it's going to do. FCX. Let's take a look at copper while we're talking about FCX. Here we go. Copper futures trading 2.7020 right now. Yeah, I think FCX might be a short now. I usually don't trade against something like that, but let's take a look at LVS. The good news is on FCX, you got a great risk reward. That's basically what I'm saying. Let me go back to that FCX. Dang it. FCX. You got a decent risk reward here. A weekly close is going to really put a good stake in the ground either way here. It might be more appropriate to wait for tomorrow's close, but I think you got a good risk reward on this one. Mattel down 10, 11%. Okay, so we're trading 27.35. This was on downtrend resistance. I was looking at it, but I did not pull it up yesterday. So now we're trading back down to weekly lows in one day here, 27.30. Actually, we're below weekly lows. Jeez. You know, you could try this morning. It's not for the faint of heart, but since we just completely traveled the whole fair auction in one move, you could try trying to pick this up a little bit here. 27.79 with stops below, but don't let it go too far. That's a little bit of a trading opportunity there. Qualcomm. Okay, so where are we at? 54.72. Looks like we're printing this morning. Let me see if that's correct. Yeah. All right, so yeah, just playing with fire down here. Here's the short-term numbers on it. Here's the 240s, 54.97 and 57.36. But again, I mean, this thing looks like it actually wants to go lower. So I don't know if that's going to be a decent trading opportunity. I like Mattel way better, put it that way. United Technologies, 109.68. 109.68, 109.68. Here's a long term on UTX. Not the best opportunity there. Western Digital. Whew, my goodness. We're going to look at MBDA too, but Western Digital. You know, this has just been proof in the pudding. 0 reasons to short this. If you've been taking that attitude, no reason to get out of the stock. You've got a good pop here, but what do you do with it now? Again, some of these stocks, I don't think you play around with fire here. Let's take a look at NVDA. And this is a good example. I think somebody had called in about this, it being possibly too high, around 65, 68. I think I remember that a while back. I said, no, you know, there's no real technical reasons to kind of start looking at this as it has gone too high and might turn around. This is how these things sometimes work out, and they're extremely painful if you play around with fire like that, or they can be. Here's NVIDIA again. You know, the daily kind of regulates that trade up, and when you're offered support on the regulation kind of time frame of this particular trade up, you know, you've got opportunities to kind of buy support. And now it looks like we actually may be breaking out of this daily profile to move higher again. So not a lot of reasons to look at these types of stocks that have had major run-ups that somehow you're the one that's going to discover the top. Let it technically have some damage first. 3M, let's see, what did they have yesterday? 178.10. We talked about we could kind of possibly look at that as on the short side to come off here. And looks like we might start having some technical damage here on 3M. Big Mo, have talked about 0 reasons to short this particular stock. Same situation on Big Mo. It can go a lot higher. Let's take a look at American Express. Here's AXP. You know, we talked about this one looking a lot more even attractive than some other bank stocks. Didn't exactly do great yesterday, but I think we're just consolidating here to you know, just spinning around, waiting for some new news to move higher on this. Citigroup. You know, it started showing some technical damage. I mean, this was a more riper situation to short bank stocks if you're trying to find one to lay the wood to. Now you've got 58.38. I think you're being given a chance to, you know, close below, go back and retest. This is our weekly profiles. And, you know, could put on a little bit of an arbitrage situation here, short Citigroup and be long another bank stock that looks relatively more attractive. That's always a decent way to look at trading. Home Depot, we talked about this one to move higher. Didn't exactly act great yesterday, but I like how this thing's kind of consolidating above daily profiles now. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Got a couple of minutes left here. Mr. Rhodes in the den was saying something kind of important that I don't mention too often, because we don't really get in on this show to really shorter term time frames, because I feel like that information a lot of times may be, not useful later in the day. That's just kind of, I'm trying to provide some general value to people who watch the show, and maybe are not trading on shorter term time frames. But the 60-minute time frame is, if you're looking at trading S&P futures, a lot of times, these quick change and tides of the marketplace can be defined pretty easily with what the broad market's doing on an aggregate basis relative to profiles. So and pre-market, these 60-minute breadth calculations are going to be pretty much on after 8:30 or so, or when most stocks open, maybe 8:15, something like that. The longer term breaths are predicated on the dailies and the weeklies coming out from the data vendor. So, but these are pre-market really good, and looking at the futures profiles themselves or the index profiles, in addition to looking at that aggregate kind of compiled view, is pretty cool to use them against each other. And this is kind of on the short-term time frame. This is kind of Custer's last stance down here at 22.92.45. So again, a pretty short-term time frame, but a lot of these stocks have opened in this time frame, and that aggregate profile calculation that we looked at for the breadth is pretty valid. And Steve was pointing out that it's a pretty good little edge here to try to trade a bounce as far as looking at the 60 minutes. So when we start breaking down below these 60 minutes, then some things might be changing. But you kind of had a reason to buy that based on that breadth calculation that Steve was pointing out. So cool that he said that. All right, just to recap here, we got about 2 minutes. Gold, I think we got some more downside here. 1176.77 is going to be something where I think you could look at from a trading standpoint with stops below, of course. S&Ps, I may have done this wrongly, but I dismantled some of that non-directional trade, got rid of some calls, and are just going to leave some puts on for a little bit here. But it doesn't look very good that we're going to have a key reversal day, but anything can happen. And if that happens, you're going to be a lot of people running for the door at the same time. The dollar, I think you got a little bit more left in this trade on the upside. 178 will be the first stopping point to kind of reassess things. The VIX is incredibly attractive here. Like Tom was saying yesterday when I was talking to him, I mean, so many things could just cause the seams to blow open here. He is moving at light speed, and that, some of those things needed correcting at light speed. I'll admit that, but you got some of these things could cause some repercussions globally that the markets may not like, and it's hard to believe that the VIX is sub 11, all things considered. I just think it's an incredible opportunity. Just like when we were talking about, the chance that he might get elected before that happened, just like the British pound trade, buying some lottery tickets on the other side of that happened pretty well. The Trump trade, we had talked about that religiously. Me and Steve Banger saying, you got to take a shot at this. So anyway, stay tuned for Larry and the rest of the hosts on TFNN. We'll be back again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.